Hello.
Hi.
Morning, guys.
Morning.
Morning.
How is everyone doing?
Very good, thank you.
Fantastic.
Hi.
Beautiful weather here in London.
It is, right? Very
Almost
sunny.
too hot, right? We get no summer and then all of it in 2 days.
Yeah. I mean, you could have wished for better. Excellent, guys. How is everyone doing? You're having a blast this week, or not so much?
Yeah, good actually. I mean, we're only being revealed parts of the course at a time. So the only thing I've got at the moment is getting in and getting to break even, and then it's sort of like freestyling with the way out at the moment. But
Yeah. Well, I mean, you've done pretty well if you're already getting those risk-free trades. So
yeah.
You're halfway there. And what about the rest of you guys? How are you bearing?
I had not a very good week at Anas. I don't know why. I took just break-even trades and a couple of hard stop losses.
Yeah.
Not a good week. I was not in the zone this week.
Yeah, I mean, this week was definitely a bit choppier, and for me as well, I only had a very decent trade on Monday, but then since then, the trade on Nasdaq yesterday also got stopped out at break even. So the market is just not giving us what we want this week, I guess. But it is only part of the scenario, which is a good thing that you're going through that, so we can actually talk about it, because it's as you remember, probably, I think you were part of the previous group. We were having a tremendous month. So you usually learn the best when you're going through downturns, and that's the best time to actually learn, because otherwise, if everything goes according to plan, you literally don't learn anything. So that's good in a way as well. And what about the rest of you guys? How is your week been? Roman, if you want to say a few words.
Yeah, for me, it's something like between 3 to 4% on the demo account this week. It was
You made or you lost?
Profit plus.
Oh, you made 3%.
Yes. Several trades were break even, but one trade was 1.5 day on gold, which was quite good, about 160 pips or something like that. So yeah, pretty nice. Still learning. Today I didn't take a trade because it was not clear to me the one which you took, if to go long or short, and the others didn't reach the zone, so I didn't take a trade in the morning.
Yeah. I must say the one that I took this morning, I used a very tight stop loss, which was kind of a mistake. If I needed to go according to the plan, the stop must have been a couple of points after the above the nearest swing high. So I just really wanted to be cheeky on this one and then do a very tight stop loss, and I almost got stopped out. But then if you were abiding to the plan, this wasn't a good example of the strategy. So your stop loss must have been a couple of points above the swing high. So this was another 5 points of a stop loss added to the existing one that I used. All right. Well, thank you so much, Roman. Anyone else?
So really quickly, I find it really interesting. I've been fiddling around a bit with like size of the stop loss, and especially because it has been a bit of a choppy week. And I find, like, in a weird way, it's better to have a tight stop loss, because I was hitting a lot of my first 1-for-1s, and it's like, okay, great, well, I don't care, right? But it was sometimes when I made it a bit wider, because I'm just fucking around, right? But like, then I'm like, oh, it's going my way, and then it's like, that's really frustrating. It's like, I'd rather just catch that little surge and have a risk-free trade, and then like,
yeah, you're onto something good, because if you've seen this morning, both of my trades, I basically took half of the profits before the price reached the limit order. So I start feeling the trade is not going according to the plan 100%.
Yeah.
So I just want to get rid
so
of.
I've also done that, where it's near my limit, is move the limit and lower the stop loss, because I'm like, okay, it's not really happening like I imagined. So
Yeah. I mean, in this case, I would just take
and have a small loss position rather than a
exactly, maybe a few
Okay.
points, which is better than still
I was
giving
going to ask about that.
Yeah. So because you're giving a little bit more room for the trade to breathe. That's the whole point.
Yeah.
But all right, guys. Well, this week I really wanted to cover the mid-range trading, which for me is probably one of the best ways to get into trades, because you're trying to minimize your stop losses and use a very tight stop loss, since the mid-range is giving you this chance where you are trading. When you're trading the zones, you need to always use slightly larger stop losses since it's more spiky. So having said that, let me just pull out the presentation, guys, and let's go through it. Okay, I'm sharing my screen. Can you tell me if you can you see my screen now?
Yes.
Perfect. Let me just make sure I'm recording this session. Yeah, it's being recorded. Okay, fantastic. So why mid-range trading is one of the best places to trade? There are a few reasons for that, and so we will go over those reasons. So first of all, how do we define a mid-range? I think we've already talked about it, but still, again, for someone who might not be on the same page with us. So we have those two extremities, which are either the supply and demand zones or the support and resistance levels. And anything that comes in between those two areas, these extreme areas, is defined as the mid-range or the range. So this area is anywhere here in between this level and that level. I think this is pretty self-explanatory, but tell me if you guys have some questions regarding that. You're good? All right, very quiet. That's a good sign. So, so why is the mid-range trading one of the best places to take a trade? So we have a few different reasons, as we've already talked about it. So mid-range trading is calmer than the extremities. So it allows you for the stop loss to be tighter, since you basically have less spikiness. Usually when the market opens, the price will retest one or the other supply or demand zones, and then it will kind of gravitate towards the middle, and then this gives you a better chance to enter at a calmer place. And the other reason why it is also better is because it gives you a little bit more time to evaluate the environments. And on the other hand, if you have missed the extremities trade, then it gives you another second chance to position yourself and enter in a trade. And again, I want to reiterate that this is the place which gives you the best possibilities or trades from a risk perspective, since your stop loss is very tight in these levels. So here I've taken a couple of examples from the trading room. If you really want to come back to those levels, you can. They're still there. So the first example is from a DAX trade, which was taken on the 25th of April this year. And this is an example of a short mid-range trade. And in this particular case, these were the zones which were predefined before the market opened. So I couldn't take this trade here. And so I was just waiting for another opportunity, which came in the middle of the range. And this was, as you can see here, our first high and then second high, which you probably can see better on the right-hand side on the line chart example here. And so this was our entry. The stop loss is placed basically a couple of points above the nearest swing high, which is here. And your stop loss is somewhere around this line, I assume. So the price retested this area again, and then it went lower. So having said that, the stop loss on this trade from memory, I think is something like 7 points, which, as you all know, it's almost impossible on the extremity. On the extremity, I think the tightest I've ever taken is probably somewhere around 10, 11 points. So it definitely does give you a better opportunity to position yourself and then take your risk-free trade quicker. The second example is from another trade, which was a long trade on NASDAQ. And this trade was taken on the 23rd of April. And again, this is a very similar scenario. We have the extremities here. There was a setup here, but it occurred just before the London Open. So apparently we are not taking that. This is the London Open. And then we have the second lower low here in the middle of the range, which gives you a good entry opportunity. And here is the line chart, so you can visualize this better. So this was the first low.
Will you always use a line chart to confirm the low, or are you happy to use the candle sometimes?
The thing is, I'm quite used to the candles.
Yeah.
Very rarely switching to the line chart, but I would suggest, if you're not 100% sure, always to double check with the line chart. Sometimes what I'm doing, instead of switching to a line chart, I'm just hovering over to see where is the close value, so I can make sure that the next close value would be lower than the first one. So if you're confident in doing it this way, and it's easy enough, you can do it this way, or just quickly flip through a line chart and then go back to a candlestick chart, or just stay on the line chart and take a trade there. Either or is okay. Whatever is actually more convenient for you. But
it's harder to play stops on the line chart, isn't it? Because
it is. That's the thing. So if you were already on a candlestick chart and you know where is your nearest swing low, and you can memorize that and say, like, I'm gonna place my stop loss
15 points.
Yeah, then you can do it this way. So whatever is faster for you. Usually for me, the fastest way is to see on the candlestick chart where exactly is the close value, and very rarely I'm switching to a line chart. I'm only doing that for illustration purposes here. Yeah, it's easier to see it if you're not very used to seeing those setups. So this was a very good example of a mid-range trade. And again, if you guys want, you can revisit the trading room on the 23rd of April, and this is where the Nasdaq trade was taken. A very good example of a mid-range trade. So the most important thing for you is to basically get the logic. I think it probably is pretty clear until now, but let me just go over it one more time. So we have, again, the two extremities, a support level and a resistance level, or this will be your demand and an area of supply. And anywhere in the middle, we are basically looking for, after the market open, of course, for those two highs, which are consecutive, and the second one is higher than the first one. Respectively, if you're in an uptrend or if you're looking for a long position, this will be your orientation. So we have our first low, L1 and L2. L2 is lower than the first low, and then this is your entry points on the L2. That's the logic, and we have different scenarios. So what also matters is where exactly in the middle of the range those setups will occur. So we don't really take all trades as short or all trades as long. There are certain places in the range, in the mid-range, where it's better to take, or the probability is higher that you will end up with a winning trade if you take a trade at a specific location in this mid-range. So let's go over those, guys. Just bear with me a second. I think someone else is oh, okay, sorry. I thought someone else is waiting, but I'm wrong. So switching to the next slides, we are basically, this is where you can see what are the best places to enter in a long trade and what are the best places to enter in a short trade. One thing that you need to take away from this slide is that you usually never take a short trade just under a supply zone.
Because it's going to go through and you're going to get stopped out.
Exactly. And the thing is that this is actually one of the best places to take a long trade. Like if you are in this position here, this is one of the, I would say, safest places to take a long trade, since the price will always retest the supply zone. It acts as a magnet. So it is one of the quickest way to enter in a risk-free trade based on experience. The same is valid for if you're very close to a demand zone. You're not supposed to take a long trade here just above the demand zone. In fact, this is one of the best places to enter in a short trade, as the logic says, since these levels act as magnets, and this can give you a very quick opportunity to enter in a risk-free trade, which is our goal. And then from here, we don't really take a guess if this will be a breakout or this will be a reversal, since this is not the point. The point is to get into a risk-free trade. And on the other hand, all of those places, they're equally safe for a long and a short position. And the thing that you should basically remember is that you don't enter in a long trade here or in a short trade just below the demand zone.
It's so funny. So can I just say, I'll say one thing, because with that one, I've started to feel this over the last year or so, but it's like when you were younger and naive, you'd be like, okay, well, we're really close to the resistance, so I can sell it here and I know where my stop is. So I think that's like a natural human instinct. Whereas actually the better thing is we're really close to everyone else's stop, so I can take a buy here and maybe it breaks out, and that's so cool because it is funny, isn't it? It's like if you showed like your dad the chart, like what do you want to do, buy or sell here? They'd be like, obviously sell. And it's like it's amazing when you think about it that way.
Yeah, you're totally right. I mean, that's a very good allegory, and you definitely should try to stay away from human nature, unfortunately. Do everything possible to go against it, and this is basically it. Totally right. So don't do what your what your instincts are telling you. Just follow your minds and follow the framework. And this is definitely not a good place to enter in a short trade. But yeah, thanks for that, Jason. Very, very good sentence. So extreme places that can that the pattern can appear. So we have again, if you imagine the supply and the demand zones, these are the two levels where we are looking for the short pattern. But then we also have one exception, guys. As we've all been practicing, the best place to enter in a short trade is anywhere above the center line of this supply zone, and even slightly above that area. So anywhere above the supply zone is also a fantastic place to enter in a short trade, with one exception, which comes on the next slide. And this is if you see the price piercing through the supply zone, and then yeah, exactly. Then your natural instinct would be you'll be waiting for the price to make a second high here. But then what the price wants to do is basically to give you a long trading opportunity, and this would happen in the same scenario as you would basically look for it in a mid-range, in the mid-range. So you're having one low and then a second lower than the first one, retesting the supply zone. This gives you the entry to go in a long trade. This also is a very good place to enter in a long trade, since the price is kind of calming down when it retests the supply zone, and then this gives you potentially a very good opportunity to go in a long trade.
Would you say that you want to see it react quite aggressively away from the supply zone for the short, effectively? So you want to see it sort of like get going, but if it goes through and then comes back, then it's probably not right, is it? Is that
exactly? Yeah, and because you only have one high here, and usually with this type of scenarios, with this pattern, you have a very strong impulse to the upside, then the price is kind of slowing down, and then this is when the second low is forming. This is your long entry here. Then on the other hand, when you see basically the reversal opportunity, the price is, again, it might be quite sharp on the upside, and then it slows down, but then it gives you another opportunity to short straight away very quickly. And when you're having a long opportunity, the price kind of slows down and then stays here for a while, and then it gives you the second lower low, which is your entry opportunity for a long trade here. And what might happen, it does happen sometimes, if you see the price going above this high here, then pausing for a bit, then you may see a reversal, but you might also see the price coming down to the supply zone, not stopping you out, and then continuing. So I would never try to take profits here and then enter in a short trade. I would just let this long run. And the same holds true for when you're seeing the price piercing through the demand zone, then coming back to retest the demand zone, and then you see the exact same pattern in a reverse mode. So you have the first high and the second high. Again, it takes a little bit longer to form than if you were to enter in a reversal trade. And this would be again a very good opportunity in terms of risk to reward, because your stop loss will be very tight, and you will be able to minimize your risk on the entry.
One question here, because I've seen as well, for example, if we are in the supply zone and the price come back to retest zone and give you the double bottom, but it does give you the double bottom with a very big candles, like quite fast. Is this something that we should worry about? Like maybe you see the double bottom, but the price is going down fast. Do we take it in consideration before, or hesitate before buying?
So you mean what do you mean? The big candle is here, or the big candle is right here?
It's when it's coming back to testing the zone again.
So here.
Yes.
I mean, that shouldn't be a concern. But as long as you see the first low and then the second low, that shouldn't be a concern. Do you have any example, concrete example on mind, or do you want to show us?
I know that I've seen it this week, but I don't have it with me. Maybe if I find it, I can share it in the community support later.
If you can do that, that will be great. So we can all visualize it better. But I think what you're saying is it makes sense. It's a great question. So let me just try to draw what you're saying. Is that basically if we have the supply zone here, that the price pierces through it, and then it goes lower than the second lower low. It acts very quickly, and you're seeing a very large candle. Is it what you mean, or?
Yeah, yes, exactly. So you see
Okay.
the double bottom, the second low, but like you see it right after like a very big candle that seems that the price is gonna go down. Like
Yep. No, I think I see what you mean. Yeah, I think this is still a good example for a long trade. If you see that the price is actually stopping here, then you see this reaction of the candle going lower and then starting to reverse and then going higher to form your second low, then this is definitely a valid entry. I wouldn't discriminate against those trades. So yeah, this would be a good example as well. But feel free to share the trade that you've seen, and again, I can have a look, but I think that's perfectly fine from what you're saying.
Do you ever doubt your zones or think, hang on, maybe I've not quite visualized this right? Because sometimes, like,
in what way?
you sort of think, shit, maybe I missed, this isn't the zone. I mean, I've drawn the wrong zone, and like I'm fucking around and it's not the right zone. Like it's you know what I mean? Like yesterday on, for example, the Dow, like I felt like, hang on, I think there's like, I feel like I was about to have a plan around a zone, which actually then when I thought about it and zoomed out a bit, that maybe it wasn't really much of a zone at all.
Okay.
We all have that problem.
And I was just pissing in the wind, like.
Yeah. I mean, I think it comes with experience. You basically will start to get used to those zones. That's why I keep on drawing them. But sometimes I might have a doubt in terms of if there are like too many swing highs and I'm drawing a supply zone. If I basically took all of those swing highs into consideration, this is the type of questions I usually ask myself.
Yeah, is this in the right place?
Yeah, sometimes, yeah. Or if you're in the middle of a range, it's harder to define a zone. That's why
like gold, for example, at the moment, there's a lot of areas which are like quite far away, which are also a zone, right? So it's like, which one am I even? You know, it feels like it's sort of it's about to do something, but so gold, like if it, I don't know, it just sort of feels like maybe it's too choppy to have a particularly strong view on it. I don't know.
In this case, we had a scenario yesterday which was similar to what you're describing. So you're looking to define the more extreme levels and then treat everything in between as a mid-range trade. This usually helps. If it's very hard to define the zones, this could be a way out. But 9 cases out of 10, for me, the zones are quite clear, to be quite frank. But you also have this type of extreme occasions when you can try to just define the extremities and then treat everything in between as a mid-range trade.
Okay. Yeah, right. I see what you mean. Because like sort of like it looks like there's quite a clear sort of zone of resistance on gold, like $2 above here, for example. But
do you want to show us a concrete example? So
well, sorry, I'm not as high tech as you, so I'm going to share my screen. I don't know if this works. No.
Just a little bit down.
Oh, here we go.
A bit lower.
Yeah, hang on. There we go.
That's it, Mike. Yeah.
Okay, cool. You'll note I've got similar colors to you because I'm so I think this zone here is quite important because there's like a big area above and it's like whatever, but the immediate 15-minute zone is here. Mm-hmm. So I wouldn't really want to take a short here if that was the nearest zone, because I think if you get there, you're very close to the bigger zone. So do you see what I'm saying?
Yeah. This is almost like the R1, R2 scenario that we were going over last time. If the zones or the levels are very close to each other, you should be looking at the more extreme one. And in this case, this is the more extreme one. Yeah,
because it's more likely to be a better trade, right? So just be patient. That's what I'm asking?
That's the logic. Yeah, that's where we're coming from. Yeah, exactly. In this case.
And so in that case, then here is a mid-range point.
It could be treated, yeah. If you're in doubt, just draw the more extreme levels and then treat everything in between.
That's really helpful. Thank you. Sorry to interrupt.
No worries at all. I think Theo is also raising his hands. Theo wants to ask a question, maybe.
Yes,
Theo.
we are talking about zones, and I sent it the zone in the chat here in the Zoom call. It was 26th this week. And can you maybe explain the upper zone of the two? If you can see it.
Quick question. Can you explain the zone on the 26th on Nasdaq, the upper zone? Okay. Yeah, this potentially could be treated as well as a mid-range trade, as I was saying to Jason. So if you want to draw the most extreme zone, this will be at 19,800. But this is the most imminent one, which because it was very close to the open, I guess, and I would expect the price to retest this as the closest zone, which might give you an immediate trading opportunity. But if you want to do it this way, you can also define the most major one, which in this case was the zone at 19,800, and then treat everything else in between as a mid-range trade. And even if you don't have the zone here, if I mean the one that is the upper one that you mentioned, if you think about it this way, if the price was in the middle of the range, it would also exhibit the same the same characteristics as if the price was next to a zone. So in a way, this always goes to define your extremities, and then if you're in the middle of the range, this area might also be treated as a mid-range trade. I'm not sure if this makes sense to you, but the point is that this can give you a bit of a help to see what you're looking for. But even without it, you still, if you're treating this as a mid-range trade, you can still find the opportunities in the middle of the range. But then if we take this example, we can as well draw the third zone, which is 19,800, and then you're going to have three zones.
Can you share your screen, please?
Give me one sec.
Yeah.
Okay.
So the last thing you said was
I'm just following his screenshot here in the chat. I think you all guys have it, but I can try to expand this probably, or
Okay.
Can
Yeah,
you
that's how
guys
it
see the
clicks.
screenshot? This
Yeah.
is in the chat, actually. Yeah. So he's talking about this zone here in the middle. So I was saying that even if the zone wasn't there and the zone was right here, right at the top, so we can treat this area as a mid-range trade, because in fact it is a mid-range trade. It's just the most imminent area that the price might potentially have a reaction from. But then even if you don't draw this zone here and here, this wouldn't be wrong, because this could be treated as a mid-range trade. And then you'll be just waiting for a reaction from the more major zones like this one. And if we had a zone here, this one here at 19,800, anything in between could also be treated as a mid-range trade, which is perfectly fine. Does this make sense?
Yeah, indeed. Because
Well,
I sometimes stress about zones, but like you say, yeah, if you take the upper zone you took and you put it on the more extreme level, it's also valid. And if something happens where we were at that point, it's a mid-range trade, so it's not bad.
Correct. This usually is the exception, which confirms the rule. But you have those maybe, I don't know, once a week, if that's something that is very hard to define, like this area, or if, let's say, the major levels on the 15-minute time frame, they're quite further away from the current price, which also could be, excuse me guys, this could also be treated in this way as a mid-range trade. So if you basically take yourself out of this example and then try to think of it in any other case, if you just define the major zones and treat everything else in between as a mid-range trade, this could also do the job. So you won't be getting confused. The point for you is not to get completely lost in those zones, because it's actually simpler than I think you guys want to see it. But probably it just takes a little bit of time to get it into your system. But in order to even simplify it further, try to draw the major levels, ignore everything in between. If there is a choppy environment, try to not pay attention to that. Just draw the major ones and then treat everything in between as a mid-range trade.
So one question related to this. So if we look at the screenshot that CEO share, if we have
Yes.
the middle, the area at the top, the kind of, let's say, the middle one, if we are not, so if I see the zone in there where the price is, I will be looking at the retest and going long, yeah, like to buy as soon as I see like two lows, yeah.
To buy where? In the middle
middle,
zone.
yeah. So you have selected like two zones, yeah. So the one at the top, the thin
Yeah.
one. So
So
if
you're
I see,
thinking of taking of placing a buy order if the price goes above the zone or if it's under?
no, if the price in there creates two lows, I will be looking to go long, yeah. If that is a support, I'll be looking to go long. But if I don't have the zone in there and I treat it as a range, I will be looking to sell, right? Looking for two highs. No, the way that I understood.
Correct. Yeah, and then this come very handy in these circumstances. So if, for instance, you see the price is just under and you see those two highs, this could be an opportunity to sell. If on the other hand you see this setup here with two lows, this will be your opportunity to go long actually. So that's why it's important to know those setups and how they appear, because you may see either or the other one.
Okay, so and this setup is independent if we are in the demand zone, so that can be treated equally even if we were in the mid range. Yeah, okay.
Correct.
Okay.
Yeah, because if you think about it, try to remove the demand zone. So this again is a long opportunity, isn't it? If you remove if you extract yourself from the demand zone, if there was no demand, if this was a mid-range trade, let's say we're in the middle of the range here, and you see this pattern, this would give you a buying opportunity. So in this way, to simplify things even further, if you don't have a demand zone and if you treat this as a mid-range trade, this would also be a buying opportunity. If on the other hand, if there was no demand zone and you're in the middle of the range, this would as well be a selling opportunity. So that's why I was saying if you want to remove those mid-range zones and treat everything as a mid-range trade, this could actually solve the equation, because you would only be looking for this setup and then sell, or you'll only be looking for this setup and then buy.
Okay, that makes sense.
Do you see my point?
Yeah.
So maybe I'm just spending too much time on the zones, whereas you basically need to mark the major ones and then treat everything else in the middle as a mid-range, because this would simplify the equation tremendously. So this was an example, guys, from the 19th of April. Just coming back to the slides.
Well, you change the colors so often; it's hard to keep up on your boxes.
Oh, okay. Well, apologies for that.
No, I'm joking. I said I've just matched the green and the orange, and
yeah. Well, this was, in my defense, this was a screenshot from the 19th of April, so I might have actually changed the color.
Yeah, nice.
But yeah, it's very similar to this first initial example of the retest of the extremities as a continuation pattern. So we had this trade that was taken on the 19th of April, and then you can see here how fast the impulse, or how big the impulse wave on the upside is, and then the price is basically retesting it and then slowing down, and then gives us these two lows here, as you can see on the illustration. Or if you want to come back to the screenshot as well, you can check it in the trading room. So this was our original entry, and that's where I entered in a long trade. And in this particular case, I risked 10 points, which was still more on the wider side of things, since usually we risk less than 10 points. This might be treated as a mid-range trade, since the price is not that spike at this level. And then what happened after the trade was taken? It went in our direction, and I closed profits very quickly, since this was a Friday trade, and I usually don't like to trade to keep trades open over the weekend. And in fact, I think the price just stalled somewhere here, and then it didn't really give a lot more. juice, and then it started to reverse when traders were taking their winding down positions. So this was a good example of this this setup, guys. And this is where the mid-range trading session ends. And some of the most important points are to basically never take a trade just below a supply zone, or never take a long trade just above a demand zone. And then something that came out from this session is, if you're unsure about the mid-range, about the zones in the middle of the range, just treat everything as a mid-range trade, and just mark the major zones, which would actually help you tremendously in spotting those opportunities, trying to not put too much emphasis on simply the supply and demand zones. And then the other major takeaway is how to enter in a long trade of the supply zone. If you see just one high here, then 2 consecutive lows, and this will be your buying opportunity. Or if you see a very fast move through the demand zone, then a couple of highs, with the second one being higher than the first one, this will be your shorting opportunity. Versus this setup, which usually appears a lot faster. You will see those 2 highs, they're forming faster than you would have the chance to enter in a long trade here, and this would be your shorting opportunity. And if you see those 2 lows under a demand zone, this will be your buying opportunity. So I would like to take a break here and then open it up for your questions based on all of those slides. If everything is clear, guys, then tell me, we can just go through some of your trades that you have taken and questions that you have prepared for this session. But I want to make sure that everything from the mid-range session is clear enough, so we can actually proceed to your other questions.
And speaking about mid-range, do we speak still about the London and US Open, or is it mid-range meaning even between the sessions?
No. It's always, we're always following this framework for the reasons that I've outlined in the previous sessions. Just try to stick with this half an hour time frame. Otherwise, you're just gonna make it too hard on yourself, and things will get out of order. So just try to stick to the first half an hour.
And do we watch the 1 minute time frame on this as well? I mean, the zones are on 15 minutes time frame, and then watch the 1 minute development.
Every time is the same, yeah. So you're taking off the zones from the 15 minutes, and then you're looking at the setup on the 1 minute chart. So every time is the same.
Okay, thank you.
With the only exception, if you're in a profitable trade and you want to see where the major zones from the higher time frames, this would be your only exception. But before entering in a trade, you're never looking at the higher time frame, since this would just add more confusion. And I keep on seeing you guys are using some of your screenshots. You're having other indicators, moving averages, whatnot. So I'm not sure if this is a good idea. If you're maybe testing different strategies, which for me it's perfectly fine. But if you just stick to this strategy, I would suggest don't try to add anything else, because this would just add another layer of frustration. It will be harder on you. And so is everything clear about the mid-range?
I had a quick question.
Yes, please.
So let's say yesterday on the Nasdaq, and I was watching that one too, and it seemed to me like a great place to go short. I took one trade and got stopped out, and then I saw a better opportunity and I took it again, which went really well. How do you see, like, you know, when something's shaping up, if you maybe time it badly and get stopped out, how do you view potentially taking another go if it's a good trade, or, you know, provided you're not just being a degenerate and saying, I want to make my money back? You know what I mean?
Yeah. So was this the US session, or was it the
US session when it opened? It, you know, I kind of I initially went short a bit early because I was a bit overexcited, like, and I think I got stopped out pretty, you know, it was a tight stop, and then it gave that another go, which is up when you sold it. I sold it then as well, before, you know, at the same times, coincidentally. So yeah. It's like, this is what I've been waiting for, and I slightly fucked the first one. Just put it out of your mind and go again, right? Or not?
Yeah. So to answer this question, you need to ask yourself first the question: how many trades have you taken so far? And if it's your first trade that went wrong, then the second trade, for me, it's perfectly fine to take another trade if you're sure that you messed it up the first time, and then you have all of the setup again, and then this is a good opportunity to go short again. excuse me, on the other hand, if you've been placing trades, 3 trades in the morning session, then this is your already 4th and 5th trade, then I would say don't do it. So it really depends on the circumstances on this particular day. So you don't really want to mess up your P&L too badly. So if you're already in your first and then it hit a stop loss or a break even, then it's perfectly fine, in my opinion, to take a second trade straight after that if you think that you're 100% confident that this is something that you've missed or you will be. Yeah, but then if this becomes a vicious practice and that this is how your morning session looks like, then you're transferring this into the afternoon session. I would say try to stay away from placing.
Yeah. Okay, cool. Thank you.
No worries. Is what about you guys? Is everything clear on the mid-range trading?
I have one question from today morning on the Dow index. Maybe it's related to the mid-range. If I can share my screen.
Give me one sec. Make a call. Yes, yeah. Go ahead. Yeah.
Let me know if you can see it.
Yes, yeah, we can see that.
So I marked the zones, the upper one and the lower one, resistance and support on the 15 minutes, and then watched on 1 minute the development of the Dow Jones, and it didn't reach any of these zones. But if I go to 1 minute time frame, there was this pattern where I saw, let's call it the first high and then the second high. So this would be the opportunity from the middle point, middle range point of view for going into a short, right?
Yes, yeah. The way you're defining it, yeah. Even though, yeah, I mean, it's perfectly fine. You're not too close to. If you can just zoom out slightly, you're not very close to the supply zone, the major supply zone. So this is a perfectly fine short entry, yeah.
Okay. So that's something which, from my point of view, confirms what you just said about the mid range. Now it's much more clear to me. Thank you.
Yeah, that's why I said sometimes if you have too many zones, try to declutter and then just leave the major ones on the extremities and treat everything else as a mid-range trade. This would be easier to to go in a trade than if you were trying to place, I don't know, 3 or 4 zones. This would just take your attention from the important things and put it onto the demand zone, which you don't really want to put all of your attention on just trying to figure out how to draw a demand zone, because then you're going to miss the whole thing after. So try to put the major zones and treat everything else in between as a mid-range trade. This could actually help you to solve this issue. And then in your particular case, this was a good example of a short trade which happened just after the London Open.
Okay, thank you.
No worries. And what about the rest of you guys? Do you have any questions? Anyone who hasn't had the chance to ask a question? If you wanna, if you want further clarification about the mid-range setups, or if you want to just proceed to asking your own questions regarding your trades.
Yeah.
Sorry, Theo.
Go on, Davide.
Okay. I have a question which is not related to the mid-range, but it's related to the risk management, if I can. Okay, is it okay for you? Is that okay for you?
It is perfect. So let's say we're closing this chapter and then we're moving on to your questions. It's perfectly fine, Davide. Yeah, go on.
Okay, right. I was wondering what's, in your opinion, a sustainable drawdown percentual. I mean, let's suppose that I am risking 1% on every trade I take, okay? And I of course I can occur in a losing streak as anybody can. But what's, in your opinion, a sustainable percentual? I mean, a percentual of drawdown that if I go over that, I can start thinking, okay, probably there is something wrong in my trading style or in my trading strategy.
So do you mean per day or per week? Or in general?
In general.
Okay, so let's break it down. Let's break it down into the separate elements. So if we're looking at this, you need to start defining it from the smallest, the minuscule, to the major macro picture. So start by defining the day. So if, let's say, you've been running already a couple, let's say 3 trades, 2 of them are stop losses and 1 of them is break even. then this is a good time to stop for the day, because this would give you 2% down, right?
Okay.
You'll be 0 on one of the trades, 2% down on the other two. This will be a good place to stop. The next day you're coming fresh, then you repeat the exact same exercise. You're down 2 more percent. In this particular case, I would stop trading for the week. So 2 days in a row. It means that something is wrong with your mindset, something is wrong with the markets. Whatever, the reason doesn't really matter. The only thing that matters are the numbers. So if you're down two times 2 days in a row with 2%, which means that this is a really an extreme case, because hitting 2 stop losses and 1 break even on, let's say, Monday, then 2 stop losses and 1 break even, or 3 stop losses on Tuesday. This is a very rare occasion. You were not supposed to see that. So we definitely need to stop, reevaluate, and maybe start again next week. I would strongly suggest, if you experience that in the trading journey, that just switch off your screens and then don't trade. These are 4%. Nothing will change if you don't trade 3 days, right? But what might change if you're already in a bad mindset and you're fearful of pulling the trigger, whatever the reason is, you have lost your confidence, then the worst thing is to just add more confusion and trades to this, because this might end up in a hellstorm. You really want to protect yourself from those moments. So 2 days in a row, just switch it off. Yes, Jason.
I mean, personally, and I'm quite risk hungry, 1% on a trade with a 10 or 15 point stop to me feels destabilizing, especially when, look, you're getting like 20 to 1 returns. Like, you don't need to make 20% on a trade. So isn't like half or even less than 0.5% sort of more appropriate, potentially, depending on the amount, you know what I mean? It seems a hell of a lot to be like 15 seconds to lose 1% when your trade setups tend to make 5 to 15 times.
This was just a hypothetical figure.
Oh, right, yeah.
Example, but then because the video was saying if I were using 1% as a measure.
Yeah,
but
I know it's used a lot, but I think it's too big for this. Because you start to get like shit. It's just too, for me. I find that 1%, if you get stopped at the moment, if you put a trade on and get stopped out, it shouldn't really feel that painful, I don't think.
Yeah, 100%, and that's why a lot of people they're trying to put this in a framework. For me, this is a wrong approach. You can't just say like you're gonna risk 2% or 1%. Just follow those rules and you'll be fine. It always comes down to your circumstances. So if you're trading on a $1,000 account, risking 1% is probably fine. If you're trading on a $1 million account, risking 1% is completely obnoxious. You should not be doing that. So that's why it really depends on your personal circumstances, and I'm having a hard time defining that, since it needs to come out from your personal circumstances. So what needs to be the starting point is, what is the figure that doesn't make you uncomfortable losing trade?
Five in a row almost. You want to be able to say like, I'm on a losing streak and I'm now not really stressed about it. I'm just going to review it almost. Exactly.
And then if you have 2 days in a row that you've been losing using this strategy, then you definitely need to take a break, reevaluate, and by taking a break, it doesn't mean take a couple of hours break. Just take the rest of the week off and then come back next week. So that's very major, guys, because you don't really want to enter in in some sort of a vicious cycle mode that you are just placing one trade after another, trying to revenge trade the markets and then trying to take it back. The markets will always be there. They won't change if you are not placing trades. So we might as well step out and then come back again in a couple of days or a week. Time when you actually feel that you're coming back with a pair of fresh eyes. You don't really want to mess it up in this way.
Thank you.
No worries. So did this answer your question, Davide? Is it more clear? And what were you experiencing? What was your frustration? If you want to share it, of course, with us in terms of the losing streak. Is it that you experienced more than 2 days and then you continue trading, or is it just a hypothetical question you are asking?
No, I was just wondering that. I'm not too frustrated because, for example, this week I just experienced a couple of stop loss and all other trades were break even. So I am risking less than 0.5% per trade now at a time. So I'm really not frustrated. And also now I am in the short DAX, which is paying me back for all the week. So So it's pretty good. No,
Okay.
but I was wondering that because I know I can occur in a losing streak, and I was wondering which is a sustainable percentage of drawdown, you know, or when I have to stop trading for some days, and you answered to my question perfectly. So
All right.
so if I have a losing streak of 2 days in a row, when I lose, for example, 2 trades, when I take 2 stop losses for 2 days in a row, it's better to stop for some days.
Correct, yeah, because you can also see that some people actually they're making a killing, whereas for instance in this week I was hitting so many break-even trades, whereas there were a lot of people in the trading room that were having like 20, 30, or what was the, I think Jose was posting a trade 1 to 40, or he can correct me if I'm wrong. But then this also it might be frustrating because sometimes you just don't see the setup as clear enough as someone else, and then you almost get frustrated that someone else is having such a trade while you're going through a break-even period, which might happen as well, which tells you basically you need to stop and then reevaluate and then continue in a few days later.
Okay, perfect. Thank you.
No problem, Davide. Okay, guys. So now back to your questions. Anything else that wasn't really clear, didn't go according to plan, or you felt frustrated about this week? I'll be happy to hear. I think Theo wanted to ask a question as well. He's been raising his hand for a while now. Go on.
Yeah, so if you can follow my thoughts on news events. So this morning I woke up and I saw there's a PCE inflations in the US this afternoon.
Yeah.
So I was like, yeah, I don't want to trade it, but I want to trade. So I made the plan to go long or short on the DAX this morning, and I did. I'm short. That's all good. And I didn't want to look at the Dow or the Nasdaq. And also, I said to myself, I want to bank my profits if I have profits on my DAX trade 15 minutes before the news announcement. So is this correct what I say? What are your thoughts? And also, you also say, be careful, guys, it's a news day. What do you mean?
Okay.
Yeah.
Let me do
Yeah.
a couple of extra definitions. So what does that mean? It means that basically you need to, you should not be doing crazy things like what Jason was asking earlier. If he's experiencing that on a news day, he should definitely step down and then say like, look, I'm not gonna place this second trade. So this is what it means. So don't do anything crazy. Don't go like don't go local, like taking 2, 3, 4, 5 trades on a news day, because usually markets are choppier. The liquidity is simply not there. A reason being is because the market participants, they're waiting for the news to come out and then to make the plan. Is it a buy or a sell? You have a lot of algos that are news related algos that are only moving when there is liquidity, when there is news on the market. So this feeds even further more liquidity. And then excuse me, when you take all that into consideration, the markets are pretty choppy in the session before the major news announcement. So that's why in what I mean by don't take it easy, or don't do anything crazy, is that you're not supposed to. Potentially the best thing is not to take a trade. Now when it comes to defining major news announcements or meetings, you need to also take into consideration what is a very important news announcement and what is not. So since we are going through a period of time when inflation is a major topic, yeah, of course, this is a very major thing. So you should definitely pay attention to it. Couple of years later, this wasn't an issue, so it was perfectly fine to trade before the CPIs, PPIs, you name it. So nowadays, it's probably not. It is on the same level as if you have an FOMC announcement or a GDP announcement, you name it. So they're very, very important, all of those meetings. So if you're placing a trade, it's got to be in the morning session, and then it needs to be probably just one. If you are not experienced with this strategy. So if you're in your case in a profitable trade, then the trade is moving away from your entry. Let's say I assume you entered somewhere here, and then the trade is already moving away from your entry. It is somewhere here, and then we're, what is it, 9:30, then the announcement is at 1:30. The price will probably do whatever it does before the announcement hits the wire, and then at this point you may either see a spike up, you can get stopped out, or you may see as well the price spiking down in your favor. This moment just before the news announcement is very crucial. So here you need to double check what is the distance. If let's say this was your entry, and the distance between your entry and the current price is that much. If that is on a DAX, and if let's say this is over, I would say more than 100 points. Me personally, I would let the trade run, and especially if this level here that we are very close to is not a major major demand zone. If your demand zone is somewhere here and not here, then I would definitely let the trade run, since very likely the price might actually retest this level first before reversing or experiencing a breakout. But then excuse me, if it's in the middle or even below the middle of the range, then more likely than not the price will actually retest this zone here and then come back. If of course you're running a profit of I would say maybe 100 points or more, even more. If you're not, if it's something like, I don't know, 20, 30, 40 points, I would definitely take my my profits and then don't risk it. So that's basically the long and the short of it. I'm not sure if that makes sense to you, but
so if it's the close, if it's only a small profit, it's basically pretty likely over the news you get stopped out either way.
Yeah,
so
exactly.
Exactly.
And if it's a very large profit, meaning that if you're running over,
it might go super large.
Yeah, exactly. You can double or triple that. We've seen that happening on many occasions. So
yeah, cool.
Yeah, in this case, just let it run. If not, if you're banking 40, 50 points, then it doesn't really make sense to risk that, because the price might also spike up and then you may not get filled. Don't forget that usually this is one of the that's a very slippery slope. If the price spikes up, here might not be any sellers, so your stop loss might not get executed here, so you might get slipped here, and then good luck trying to figure it out with your broker. So you don't really want to end up in such a scenario. And it's less likely that this could happen if you're in a 100 points in a 100-point winning position, because if you look at it this way, by the time the price goes all the way excuse me, up to fill up those 100 points, you must start finding some liquidity. So even if you get stopped out, chances are you're gonna get slipped are lower than if you were only running a 40-50 point trade. The price will start spiking up. By the time you get filled, it might fill somewhere here or right at the top, which I've seen it happening before as well. So you might end up running a 50-point loss as well on a trade like that. God forbid more. So that's the logic behind, and that's why I usually, if I'm very deep into profits, I'm trying not to take them too quickly, because usually the announcement can just bring me more juice to the trade, and then it can catapult the trade to the next zone or level. Does this make sense to you, Theo?
Yeah, very good. Nice. Yeah, I was also thinking about slippage. So yeah, I'm putting my timer on my phone 15 minutes before the news. I check it out, I let it run, or I get out. That's the plan. Yeah.
Exactly. And then the other thing is that we've also talked about it. It's not a good idea to trade the news for these particular reasons. So trading the news could be 5 or 10 minutes after the news are out. So markets are still they're still liquid, but they're calm enough to give you a trading opportunity, which you supposedly will not risk that much, even though stop losses after the news announcement, after a news announcement, they usually tend to be on the high side or higher side. So you're expected to go with a minimum, I would, based on experience, 15 points on a DAX. Sometimes it can go up to 20, but then also you can it could be quite lucrative as well, because the price moves quite quickly, so you can bank as well a very decent profit out of after a news announcement, not during.
Yeah, thanks.
No problem. All right. Anyone else that wants to have a that wants to ask a question, guys?
I do actually.
Oh, yes, go on, Jose.
It is actually related to what Roman has shared before. So I sent you a screenshot, I think, in the chat. If you can check, if you can open it.
Let me see. Oh yes, yeah, I can see. Let me just download that, and then open it so everyone else can see it. Give me a second. Okay, I'm pulling this up and sharing my screen.
Yeah.
Can you guys see it?
Yes, yes, we can. So this is, I think, the example that Roman gave for like a mid-range trade. So where you see the circles is the double top. But what I can see is that the price is going up. So the price has been giving us like double highs for quite a bit. So how do you identify without the demand zone or anything that the price is it is a reversal instead of just the price keep going up as it has done
The busy
before?
time, isn't it?
Exactly. The time first, and then second, you still need your major zones, even if you don't have the zones in the middle. So it's not too over cluttered with zones. You still need to draw your major zones, right? So at this time, I'm not seeing any zones on your screen, but in practice, you need to have one on top and one on the bottom. So this,
Yeah, because
that's the
this is
reason.
the 1 minute, they are quite far. So this is kind of in the middle.
Okay.
So they are out of the screen, but they are there.
So in this case, yeah, this is a perfect mid-range trade. This is not too close to a supply zone from what I can see. And this gives you an opportunity to go in a short trade.
Okay, so as soon as the price goes into the actual time frame that we're looking for, like the London Open, within that half an hour, if that has like a double top, we can be looking at a reversal. Yeah. Okay.
Exactly. Yeah. Try to make sure you're not trying to enter in a trade before, because you can get stopped out here. As you can see, there was another second high. This is a very good example. I think I mentioned it before. Someone was asking me, how can I trade like 5-10 minutes before the market open? This is exactly the reason why it's not a good idea, because you might actually get stopped out here. And the market is waiting for the liquidity to pull in, and then to give you a trading opportunity. Because if you think about it this way, traders need to place trades. They will be placing trades, and it's a matter of time before they start doing that. That's why we need to wait for the market open first, and then give it half an hour as well to start seeing those trading opportunities.
Okay, so we need to give a little bit of time after the market has opened for start looking for opportunities.
Yeah, that's why. Yeah, you should not be looking for opportunities before 8 o'clock, or for you it will be, I assume, 9 o'clock.
But like after 8, even if it's like 8:01, that's perfectly fine to start. Because the thing is that technically, in this one, the first circle could be our second high, right? On this trade.
What time did this second circle occur?
You can see that it's like maybe like 5 minutes after so this is 1 minute candles, and you can see that the actual green frame is the London market.
Okay, where? Oh, the green line is the London Open.
Yeah,
okay,
yeah, exactly.
I see what you mean. In this case, I think you already had a long trade that was set up here as two consecutive lower lows, which was just after if you can see, just after the green line. From the screenshot you've sent us, it looks to me like it could have been one low and then a second low with a little green candle, and then you have potentially a long setup just before the large green candle. It might be easier to see this on a line chart, actually, or if you can see where exactly.
Yeah, no, I see it. Yeah.
But in this case, yeah, you're right. This could have been if you took this second, or the example of your first circle, you could have been stopped out on this one, and you wouldn't even had the chance to have a break-even trade. And then the second trade, or the second circle, this would be a profitable trade. So you're right if you're looking at it this way. But then if you're looking at it as well, precisely this first lower low and the second lower low, which I'm not sure if it's a lower low here, because I can see clearly where exactly it goes. It could have been a long setup, and this could have been a break-even long trade. And then by the time you were breaking even, then you potentially would have had another possibility to go in a short trade, which occurred around based on your time frame 10-20. You see you have two highs just after this big move to the downside, when the price stops for a while and then it gives you another opportunity to enter in the short trade. I am not sure, just above your red arrow, if you can, sorry, below your red arrow, this could also be a potentially a short entry.
Sure. Okay.
Right here, if you can see my cursor, I'm moving it just right here. This could have been potentially another short entry based on the setup here.
So let's say that we are looking at this graph like on live at the moment. This is showing us like at the end, we see two lowest lows. That is an opportunity to go long. It just I cannot draw in here. At the end, at the very end. Yeah, those are two lows. Yeah, this is your arrow is in the second low. That's an opportunity to go long.
Yes, but no, because this is already too late. I mean, this means you need to take all of those trades, which for me is absolute craziness. So that's why I said just concentrate in the first half an hour, which is basically finishing here. This is your last candle, the 8:30 candle. Anything after that, I wouldn't really consider. So yeah, are you trading like longer than this first half an hour, Jose, or you're just
no normally like half an hour, 45 minutes. But I was just curious because I was looking at the graph and I just saw right now.
Oh, okay. Yeah. If let's say this was falling under the first half an hour time frame, yeah, definitely.
Okay. Thank you.
No problem. Anyone else, guys? I think Ivo and Caramuero haven't asked any questions. Do you guys are you perfectly fine? Do you wanna give us your feedback, your questions? How do you feel today?
Oh, I wanted to ask some questions, but I realized it's a Friday afternoon. Oh my God, it might kill the mood though.
Friday morning, don't worry, we've got all day.
I was hoping we're gonna finish on a high, but yeah.
Okay, maybe okay. So from these past sessions, right, Atanas, we have discussed several things like taking a trade towards the nearer zone, mid-range, and taking the most extreme zones if there are multiple zones, right? Now, so I have two questions, right? Apart from the methods we have discussed so far, are there any methods you use to determine if you should trade trend continuation or trend reversal on market open? And I know, right, that we have discussed not to have any bias, but when I see the chats, right, I noticed that some of our members here, they use other methods to determine, to trade trend continuation or reversal. And just speaking for yourself, right, Atanas, apart from the methods you have discussed, personally for you, is there any other, methods you use to decide if you should trade trend continuation or trend reversal? Because sometimes what I realize is very random. Very random.
I see where this is going. Yeah. So in all honesty, I'm perfectly fine with that, guys. The only problem is that if you're not experienced with the strategy, you may fall into so many traps. If you start doing that, you can't even imagine. So if you want to add more layers of complexity, yeah, I mean, it's up to you. My honest opinion is that you shouldn't, not at this stage. Maybe once you're super confident with the strategy, then you might try to treat yourself with the luxury of trying to follow the trend, which probably will seize some of the bad opportunities and then give you more good opportunities. But then if you're doing this straight from the bat or like straight from the beginning, then you would be you're basically risking to overexpose yourself and maybe miss some opportunities and take others. So you need to really clearly define that. And for me, it still would be biased to actually follow the trend because nobody knows when the trend will end, and you're risking of, let's say, taking perfectly fine trading opportunity right at the top, which we're not trying to define the top, but because the setup is there and you're taking a trade, you're entering in a risk-free trade, the price moves miles away. And if you were having this initial bias or initial, let's not even call it bias, idea of trading with a trend, which is perfectly fine. I know a tremendous amount of books have been written, but then if you look at the statistics, like 85% of the hedge funds that are not just trend following in general, the hedge fund industry, they're failing in 5 years. And those guys, they're you know, they have a bunch of experience, so they know exactly what they're doing. And if these people are so confident in what they're doing, and then all of them are with bias, if all of them or a big chunk of them are failing within 5 years, then this might, you know, partially answer this question as well. So what you're trying to do is to be completely unbiased when you're taking a trade. So if you really want to follow the trend, if you have your own system, you know, you might as well do an experiment and prove me wrong. Take 2 accounts, trade on one of the accounts with your trend following approach, trade on the other accounts with a completely unbiased way of looking at the markets. And after a significant amount of time has passed, let's say, I don't know, maybe 3 or 6 months, come back to it and prove me wrong. Which one was the one that performed better?
I'd be interested to do that experiment if you would, because if it helped, because it's something that I can't get out of my head. This
All
idea
of
that
us know how it goes.
if you, let's say, trade a handful of markets like you do, or we do, then if you could have some way of qualifying the trend, or whether it's chopping before, which then eliminate, let's say you said, okay, NASDAQ's trending up, I'm only looking for long trades, for example, or gold has started to go down, I'm only looking for short trades. And then you only accept those within the context of the system that you have, then it would be interesting to see whether that would have any other, probably not, to be honest, probably way worse, but it'd be interesting to see. Because it's certainly like the NASDAQ has been such a raging bull. I thought you were onto a real winner yesterday, and it's like, fucking hell, it keeps coming back.
Yeah.
And it's something I can't get out of my head, but I mean, obviously I'm at early days, so it's just interesting.
No, I mean, you guys are
Trade
also
NASDAQ.
yeah. So sorry, say again, Caramuero.
Oh, sorry, I was asking. Oh, Jason, you trade NASDAQ. Is it more than the DAX?
I don't trade the DAX actually, because I only found out about the DAX really when I followed you guys.
Personally, like personal observation, right? When I look at the DAX and I look at NASDAQ, right? I don't know, but personal opinion is that NASDAQ somehow looks more cleaner than DAX in that the zones are better defined. I don't know if anyone feels the same way. Yeah.
Is it because the zones are defined in the morning session when it's calmer and quieter, or you mean in general?
Oh, in general, right? If I were to compare New York versus New York for DAX and NASDAQ, right? NASDAQ looks cleaner, and if it goes in one way, it seems that most of the time it goes that way. But I might be wrong. This is like my recent observations. I still need to go and test. Right now, I'm trading DAX live, but recently I've noticed NASDAQ with that thing. So I'm just gonna see what happens. Yeah, but one question, Atanas. Last question on proximity, right? So, you know, we discussed that when we look at support and resistance zone, but we always look at proximity, the nearest zone, right? And proximity can be very subjective. Like, let's say if I compare on a 4-hour time frame, on a 1-hour time frame versus the 15-minute time frame. Let's say on a 15-minute time frame, oh hey, you know what? There is maybe no zone there, right? But if I go to the 4-hour, right? Hey, there's actually a zone, and it looks very major. But on a 15-minute, there is none, right? So if that is the case, right, should we still consider that 4-hour zone a major zone, even though it's quite far away when we talk about proximity?
No, you shouldn't. You should only be basing off your assumptions on the 1-minute time frame from the 15-minute time frame, because 4 hours, it might be very close if you switch on the 4-hour from the 4-hour perspective, but it might still be like 50, 60, 70 to 100 points away from the current price. That's why if you stick to one thing, it needs to be only one thing throughout the whole game plan. So you only stick to the 15-minute time frame. If you draw the zones, if you don't have a zone which is close enough, don't consider the 4-hour time frame. That's why I said don't even look at those time frames before placing a trade. This would answer your question. If you don't look at the 4-hour time frame, then there is no reason to see this zone that is a major zone. Only switch back to the higher, or switch up to the higher time frames when you're in a profitable trade that has been running for a while, and then you're probably just before the next session, you're asking yourself the question, shall I take my profits off the table? Shall I just let this trade run? This should be the time that you should be looking at and checking on the higher time frames. Otherwise, at any other time, this could only be a setback, because you would start asking yourself the question. You have this little bitch inside of you asking you and telling you like, oh, shall I take profits here? And we are approaching a high level. But the reality is that nobody cares about that. And then you should only look at it just before the next market open, when actually people care about it, because traders, they need to trade around, they do trade when the market opens. This is when the liquidity is at its highest levels. So this is the important place for you. Anything in between, if there is nothing major moving the price, is very choppy. So you shouldn't be concerned if the price is nearing a zone. So that's why don't look at the higher time frames before placing a trade, or even if you're running a trade, only look at the higher time frames just before the next market open. This could help you to run a trade to its fullest. And this is something we talked about it, I think last time, but I can get, I can put more emphasis on that, and I cannot get bored of repeating that, since this is a very, very major thing of running those, profitable trades. And if you're tempted to look at the screens, just switch them off, man. It's the best practice. I know it's hard.
What do you do when you say you're stepping away? Do you go and read a book, or what do you what do you do to other shit? Or do you...
Oh wow, that's a nice question. So yeah,
question. Sorry, I mean you don't have to answer.
No, I'm happy to answer. Yeah, I like reading as well, and I also like running as well.
Oh, nice.
And then yeah, I have another business that I'm running as well, which takes a bit of my time. So it's actually a few things to be quite frank. So I definitely keep myself busy, but that's another reason why I don't really like to trade for too long, because it actually takes a lot of your time and energy, and I don't think that this is a productive energy. We don't really see the efficiency at the end of the day. You haven't really achieved a lot more if you stayed 6-7 hours in front of your screen. Chances are you actually can
cut it up. Yeah.
Yeah.
Oh, actually, random question. Like, are we going through timestamps next week?
Random question. Yes, correct. Yeah.
Okay. Friday afternoon, I don't think I should speak. I'm feeling tired. I wanna rest. Oh.
All right. Well, we'll have the recording, so you can always revisit, right?
Yeah.
All right, guys. Well, we've passed a little bit after the 1 hour mark. I hope I'm not keeping you for your daily chores or whatever you need to attend to next. But again, it was a tremendous pleasure. If you have some questions, please address them to me later, whenever it's a more relaxing time for you, so to speak, or you feel more refreshed. And I see Eva was saying that she's at work, so her boss is around. We don't really want to get her fired. So guys, it was a tremendous pleasure, and I'll see you next Friday. In the meantime, I'll see you this afternoon as well. If there is something, we'll definitely get into it.
Thank you, boss.
Thanks, guys.
Thank you.
Yeah.
Thank you. Have a nice day, everybody.
Thank you, guys. Thank you. See you all.
See you.
Bye.